Tesla just reported Q4 earnings, and the market completely missed the most important part. After hours, the stock jumped over 4%, but this wasn't about deliveries. It wasn't even about revenue. For the first time ever, Tesla revealed something investors have been waiting years to see: 1.1 million FSD subscribers. And starting Q1 2026, Tesla is going all in on subscriptions. By the end of this video, you'll understand why Tesla is no longer just a car company and why this earnings report quietly changed the company's future. Hey everyone, welcome back. I'm a Tesla owner and long-term investor. Today, Tesla released its Q4 2025 earnings on January 28, 2026. And this was one of the most important earnings reports Tesla has ever delivered, not just for investors, but for Tesla owners as well. Because this report clearly shows where Tesla is heading next. Let's break it down step by step. First, let's quickly go through the key numbers. Tesla reported Q4 revenue of $24.9 billion, beating expectations of $24.5 billion. Full year revenue came in at $94.8 billion, slightly down year over year. But this is where context matters. On the earnings side, Tesla posted non-GAAP EPS of 50 cents, well above the consensus estimate of 44 cents. That EPS beat is one of the main reasons the stock jumped after hours. Now, deliveries. Q4 deliveries were 418,227 vehicles, down 16% year over year. Full year deliveries came in at 1.63 million vehicles, a 9% decline. On the surface, that doesn't look great. But here's the key point. Despite lower deliveries, Tesla's profitability actually improved. And that's where this earnings report gets interesting. Tesla's total gross margin jumped to 20.1%, up from 16.3% a year ago. Even more important, Automotive gross margin excluding regulatory credits hit 18%. That's a big deal. Why? Because over the past year, many investors believed Tesla was stuck in a price war spiral. Lower prices, lower margins, weaker profitability. This earnings report says the opposite. Tesla is no longer chasing volume at any cost. They are prioritizing margin quality, lower volume, higher efficiency, better cost control. This is a strategic shift. And then there's the real surprise. Tesla's energy business posted gross margins of around 30%. Let that sink in. Automotive margins 18%, energy margins 30%. That means Tesla's energy division is now more profitable than its car business. Energy revenue in Q4 reached $3.84 billion, up 25% year over year, and gross profit hit $1.1 billion, setting another record quarter. This isn't a side business anymore. Energy is becoming a core profit engine, and we'll come back to this later because it completely changes how Tesla should be valued. Now, let's talk about the moment that shocked the market. For the first time ever, Tesla disclosed its FSD subscription numbers. As of the end of 2025, Tesla has 1.1 million FSD subscribers. This includes both one-time FSD purchases, monthly FSD subscriptions. Here's the growth trajectory. In 2021, 400,000, 2022, 500,000, 2023, 600,000, 2024, 800,000, 2025, 1.1 million. That's a 38% increase year over year. Tesla never shared this before. And the reason they did now is important. The disclosure was tied to Elon Musk's CEO compensation plan, which required Tesla to exceed 1 million FSD subscribers. But the real story isn't the number, it's what comes next. Starting Q1 2026, Tesla will eliminate the one-time FSD purchase option. FSD will become subscription only. This is a massive shift. Under the old model, Tesla collected $12,000 to $15,000 once, and that was it. Under the subscription model, $99 per month, $1,188 per year, nearly $12,000 over 10 years, but as predictable recurring revenue. And because this is software, gross margins can exceed 90%. This is Tesla transitioning from a hardware company into a software business. And that changes everything. Let's slow down here because this part is critical. Moving FSD to a subscription-only model completely changes how Tesla's revenue behaves. With a one-time purchase, revenue is lumpy. You sell FSD once, collect the cash, and that's it. With subscriptions, revenue becomes predictable, recurring, scalable. At $99 per month, Tesla earns about $1,188 per user per year. If Tesla reaches just 1 million active FSD subscribers, that's nearly $1.2 billion in annual revenue. And because this is pure software, gross margins can exceed 90%. That means over $1 billion in high-quality gross profit every single year. And here's the key psychological factor. A $12,000 upfront purchase feels expensive. $99 per month feels manageable. The barrier to entry drops dramatically. That's why subscriptions scale faster than one-time sales. This is exactly how Tesla builds a long-term software cash machine. Now let's return to the energy business, because this might be the most underappreciated part of Tesla right now. In 2025, Tesla deployed 46.7 gigawatt hours of energy storage, up from 31.4 gigawatt hours the year before. That's nearly 50% growth year over year. Over the past 5 years, Tesla's energy deployments have grown more than 12 times, and margins, around 30% gross margin, higher than Automotive. In 2026, Tesla's new mega factory in Houston, Texas will come online, adding roughly 20 gigawatt hours of annual capacity. That puts Tesla on track for 70 to 80 gigawatt hours of deployments in 2026. Longer term, by 2030, energy revenue could reach $60 billion, gross profit around $18 billion, representing 25 to 30% of Tesla's total revenue. At that point, Tesla is no longer valued as an automaker. It becomes an energy and AI infrastructure company, and if you own a Tesla, your car is already part of that ecosystem. So what exactly is Tesla focusing on in 2026? There are 3 major strategic pillars. Tesla's robotaxi service launched in Austin in June 2025. By the first half of 2026, Tesla plans to expand to 9 cities, including Dallas, Houston, Phoenix, Miami, Orlando, Tampa, and Las Vegas. As of today, Tesla's robotaxi fleet has logged 650,000 miles. By the end of 2026, that number is expected to exceed 10 million miles. This data advantage compounds over time. The more miles driven, the better the system becomes. In the first half of 2026, Cybercab production begins. Around 5,000 units, Tesla Semi-deliveries ramp to 5,000 units. The economics of the Tesla Semi are staggering. Diesel truck cost about $1.51 per mile. Tesla Semi around 70 cents per mile. That's a savings of $87,000 per year for a truck driving 100,000 miles. Payback period, just 4 to 8 months. This is why fleet operators are lining up. Tesla will unveil Optimus Gen 3 in Q1 2026, with mass production beginning by the end of the year. Long-term goal, 1 million units per year. Estimated price, $20,000 to $30,000 per unit. Optimus targets, manufacturing, warehousing, logistics, elder care. By 2030, Optimus alone could generate $10 billion or more in annual revenue. Now let's talk about AI. In January 2026, Tesla announced a $2 billion investment into xAI, the AI company founded by Elon Musk. Here's how the strategy works. Tesla focuses on physical AI, autonomous driving, robotics, real-world interaction. xAI focuses on digital AI, large language models like Grok. The real power comes from combining the two. Imagine getting into a robo-taxi and saying, "I'm in a hurry today, take the fastest route." Grok understands the intent. FSD executes the driving. Looking ahead, Tesla's AI-5 inference chip, expected around 2027, will deliver up to 50 times the performance of the current AI-4 chip. That opens the door to on-device Grok running directly inside the vehicle. At that point, Tesla vehicles become rolling supercomputers. Now let's talk about the stock. After the earnings release, closing price $431, after hours around $450, up over 4%. The market reacted positively because of four key factors. 1. EPS beat. 2. Margin recovery. 3. FSD subscription transition. 4. Energy business strength. Analyst views remain mixed. Morgan Stanley, cautious. Wedbush, bullish. Barclays, conservative. My personal long-term framework looks like this. Mid-2026, $480 to $500. Late 2026, $550 to $600. 2027 and beyond, significantly higher. The risks are real: regulatory delays, competition, macro uncertainty. But the direction is clear. Tesla is transitioning from hardware to software and services, and markets reward that transition. So, what does all of this mean for Tesla owners? Your car is not just a vehicle. With FSD, it can become autonomous. It can generate revenue with energy integration. It becomes part of a massive energy network. With AI, it becomes an intelligent machine. Starting Q1 2026, FSD will cost around $99 per month. If you're not using FSD yet, this may be the best time to start, because over time, your Tesla won't just drive you, it will work for you. If you found this breakdown helpful, please hit the like button and subscribe. I post Tesla updates and analysis every day, so if you follow this channel, you won't miss what matters. Tomorrow, I'll break down the conference call and what management said between the lines. Thanks for watching, and let's continue enjoying life with Tesla.